Hey, what is going on? Welcome back to the channel. In this video, we're going to be taking a look at Near Protocol and their Near token. I do want to say that I'm not a financial advisor. You should do your own research before investing money into crypto. Now, with that being said, I also want to mention the donation links down below in the description. If you want to support Ukraine, then feel free to head over to those links. Those are official donation links to support the Ukrainian refugees and Ukraine's military. And if you're one of those people who are going to leave mean comments and pro-Russian comments, then please spare us some time. Just leave the channel. You don't have to. No one's forcing you to watch the videos and no one's forcing you to donate, but I have a right to support my country, and that's exactly what I'm going to be doing. So let's jump into the daily chart. So let's jump into the Fib retracement actually and show you how my Fibonacci retracement is set up. So we have our swing low all the way back here in July. So this is the summer low, and basically what happens is most of the projects printed a all-time high or a local high in March, April, May, either one of those months, and then they printed a swing low over here anywhere from May to July. And some projects have actually recovered very nicely and have never looked back on the summer low, but some projects have actually lost this summer low, which is quite negative because then you're printing a lower low, and that's a continuation of a downtrend. But here, Near Protocol is doing what it needs to do, absolutely blasted. And as you can see, during the summer, the swing low was over here at $1.50 basically. So we've done 1,200% of profits, which is not bad, at all. And I did set this Fibonacci retracement a long time ago, and we did have this 1.618 target at $20.30 a while back, way before we even got, I think, to the 1.272. So yeah, you had all these targets prior to us hitting them, so you could have taken some profits and you could have bought back in at lower prices. So what happened over here is we broke through the first fib level over here, as you can see. We had a back test of support over here, which is exactly what you need to do. Then you ran all the way up to the technical target, which is $20.30. And that's our technical target because that's where that's what you target after you break the first fib level, right? Especially if you had a back test of support. So you ran into that, then you came all the way back down to the first fib level, to the previous all-time high. You back tested that zone once again. So this is a very, very strong support level from now on. And from here, we started breaking through the 1.272, and we're about to get to the 1.618 once again. Now, if we don't break through the 1.618 this time, then we are potentially creating a double M top pattern with a potential target to the downside if you start losing the neckline below over here. So I don't think that's going to be happening because the neckline over here is way below $10, and currently we're sitting at $16, almost $17. So I wouldn't expect us to lose this swing low. We just had a bullish cross over here at the end of April. No, actually at the end of March. And since then, we have been in a beautiful uptrend. Now, if we zoom out just a little bit over here, so the bullish cross occurred March 25th. From there, we have got ourselves overextended from the 20 EMA, which is the yellow moving average over here, and the red one is the 55 EMA. So as you can see, there's quite a bit of a gap in between the EMAs, so that is a bit negative, right? There is still some room to grow. Obviously, we can get all the way to the 1.618, and from there have a correction all the way down to the 1.414 over here, which is sitting at $14.70. Or we can come back down to the 55 EMA, depending on where that would be by the time we presumably get to the 1.618. But that's all speculation at this point, obviously. What is important and what is positive is that we're holding the 20 EMA as support, and the 20 EMA is your uptrend support band, obviously. So as long as you're above the 20 and you're bouncing off of it, you're in an uptrend, things are looking good, right? Once you start losing the 20 EMA, you either target the Fibonacci level below the 20 EMA or you target the 55 EMA for entries. Now, for now, I would target this light blue buy zone that I have for you over here. So anywhere from $15.40 all the way down to $14.12 is a good buy zone that I would have on my radar. Basically, I would set up some buy limit orders over here, because you can see that we did have multiple back tests of support of this buy zone, as you can see, 4 in total. And yeah, this just shows us that this area has a lot of support. So people are setting up buy orders in this zone. And like I said, if we start dropping below this zone, I would look at the 55 EMA as a support. Now, let's say Bitcoin entered a strong downtrend. We had some FUD, some bearish news dropped into the markets. And let's say Bitcoin dropped back down to $35,000. Now, where would I be looking to enter? So I would have some buy orders over here at the 1.272, and you can have them up already, because you never know when a black swan event is going to happen, obviously. So you should have, some buy limit orders spread out across the chart. You don't want to buy all in at one price, right? That's not very smart to do. So yeah, this is something that you want to keep an eye on, and the 1.272 over here is a strong support level that we have tested as resistance previously, but since we broke out, we haven't had that back test of support, which isn't negative per se, but if we were to come down in a correction, I would target the 1.272, so just keep that in mind. Now let's jump into the daily RSI and see what's going on over here. So the pink trend line is for the weekly chart. We're gonna jump in there in a second, but the white trend line over here, as you can see, is for the daily, and we do have multiple touches of resistance off of this white trend line. As you can see, the arrows are pointing towards each touch, and we had another touch over here. Right, we had this nice fake out. We got overbought here above the index of 70, so that was a nice place to take some profits. And currently we're running into the white trend line once again, so we can get obviously rejected from here, and we can start pulling back down. And once you see the RSI come back, to the area below the index of 50, that is a good place to start dollar cost averaging. And as you go down, you can just buy in and dollar cost average even more. Okay, so below we have a support level over here, the yellow trend line at 36, not 36. Let me just get that properly. So 36 on the RSI over here on the index is a strong support line that you want to hold, because if you lose that, then you're probably going to get all the way down to this light blue zone over here, which is your oversold zone. And that's where the assets are the best. Basically, that's the best time to be entering all the cryptos, all the projects that you want to enter, because once a project is oversold, then the risk reward ratio is in your favor, because once you're buying the asset after a lot of people have sold off, then you have a lot of more upside potential. And as you can see, each time you bounced or entered this light blue zone, you had a strong pullback to the upside, basically a strong move, an impulsive move to the upside. So keep that in mind. Now let's jump into the weekly chart real quick. Okay, jumping into the weekly chart over here, let's jump into the RSI. So the pink trend line over here represents a resistance zone, and we just broke through this resistance. As you can see, we had one bounce over here, a second bounce over here, a third bounce over here, a little fake out over here in January, another bounce over here at the end of March, and right now we're breaking through that pink trend line. Now this could end up being a fake out, obviously, ignore the white trend line. This could end up being a fake out, but you never know. But once you break horizontal resistances, most of the times you do that with authority and you have strong impulsive moves to the upside. So if you see yourself get overextended on the RSI on the weekly chart all the way up here to the overbought zone above the index of 70, then that would be a good place to start looking to take some profits. And, it depends on what your targets are, depends on what your financial situation is, obviously. But, I'm just letting you know that that would be a zone where taking profits would be smart if you're not holding for the super long term, obviously, or you're not staking. Now, on the 20 EMA and the 55 EMA over here on the weekly chart, so you can see we had a nice bounce over here off the 55 EMA. So look for this as your support band if you start getting if you start having a correction, a strong correction in the markets, but I highly doubt we're going to get down to the 55 EMA anytime soon. The 20 EMA over here sitting at $12.50 is something you want to keep an eye on, because we're getting a bit overextended from the 20 EMA over here. And you want to come back down and back test that as support because you broke off from it, and you want to come back as support because if you're far away from the 20 EMA, you know, usually there is not a lot of time before a pullback, right? And the higher the time frame, the more important all the crosses and the patterns are, as you know. So I don't want to take a lot of your time. Pay attention to the 20 EMA on the weekly chart, and let's jump into the Binance chart real quick. Switching over to the 4-hourly chart on the Binance chart website. So as you can see, we do have a descending triangle over here. You have multiple touches of support over here, multiple touches of resistance over here, as you can see. And right now you finally broke out of there. And usually this is a bearish reversal pattern. So usually you break to the downside from a descending triangle because you're getting pressured down. But here you actually broke out, and you're potentially looking at a target of $20.60 over here. So that could be something that can play out. Obviously, right now, you would want to look for a back test of support of either the 4-hourly 20 EMA or the support, which is now the support, obviously, or the previous resistance of the descending triangle over here. Come back down, back test it, and then continue on with your uptrend. So that's just something to look out for. And by all means, we can absolutely have a pullback back into the triangle and break to the downside. Now, if we were to do that, you could target around about $10.50 over here. That would be your technical target if you start breaking down. But like I said, I do not expect that to happen unless Bitcoin drops below, $38,000, $37,000. So yeah, that's pretty much it, guys. If I missed out anything on the chart, please let me know down below in the comment section. Feel free to follow me on Patreon. It's a great way to support me and a great way for you to give back and a great way for me to give back to those who support me. We have low cap gems in there, buy and sell alerts, TA requests, video requests, project reviews, market sentiment analysis, and a whole bunch of more stuff. So feel free to check that out. I'm going to catch you in the next one. Goodbye and good night.